Matt Bennett is with us of agmarket.net. He is the lead market analyst for Clear Channel. He also is a Tier 3 registered broker and works with agmarket.net. He happens also to be a farmer with 3,000 acres of corn and soy and 60 registered Angus cattle. He has a wife named Tiffany who's getting a new kitchen, and they have 5 kids. And if you want to really see him smile, ask him about the littlest one in the bunch. Matt Bennett, thanks, buddy.
Thank you. All right, let's talk. How did the USDA come up with their numbers? I mean, basically, a lot of my slides, of course, are as of December because I have no time to put them in here. But how did they come up with a little bit tighter carryout on corn? What did they do today? They dropped demand by 180 million bushels, but they lowered production by 200 million bushels, basis lower acreage, harvested acreage. What's that based on? Your guess is as good as mine. I'm not upset about it. I'm sitting here looking at corn up 13 cents, beans are up 29, wheat's down a little bit, so I'm assuming wheat acreage, as I suspected, was up. I'm a little bit surprised, to be totally honest, that that you see, for instance, planted acreage and harvested acreage down. It's fine with me. I'm a little concerned that we've kicked the can down the road today, so to speak. I didn't want to see a limit lower day. I was just making a comment to the guy that's working with me that is here today, that he's manning my phone right now, that I hope corn settles between 10 lower and 10 higher, because that means it's not a wild and crazy panic-filled day. But I've been talking so far this year about making the most of a golden opportunity because, we've all had a pretty good run of a couple of years, correct? I mean, most of us. I don't know, you guys seem pretty enthusiastic at this point. I'll tell you what, after 2 years that we just had, I'd hope you'd be enthusiastic. I don't know how many times in your career you're going to have 2 years like 21 and 22. It's going to be rare. Maybe never again. I don't know. I hope you do. I hope I do. I've got a kitchen to pay for, as Jeff suggested. It started out as a remodel. I talked about it all winter last winter, and I've had people ask me about it out and about. Started out as a remodel, turned into an addition, and now we're essentially adding a small house onto the side of our house. Not particularly thrilled about the whole situation, but you know what? It's gonna be what it's gonna be. It wasn't all my wife either. I'm not gonna blame it all on her. It's one of those things where, they ask you, well, do you want footings or a basement? How much more is a basement? It's only 15 grand. Okay, well, that don't sound bad. I told my wife, though, I said, we got to remember, if you're going to finish it out, it's going to be a heck of a lot more than that. Well, do you want a walkout basement or you just want a regular? Because this lay of the land's perfect for a walkout basement. Well, how much more is that going to be? And I'm just like, you know what? Why don't you make the decisions? We'll go from there. Kind of regret that at this point in the game. But regardless, that's where we're at. So let's get into the nuts and bolts of it. I'm going to skip over most of the USDA stuff. I want to look at some charts after we talk about the main things. State of the markets, I always talk about this, and I'm going to rush a little so I can get you guys to eat at noon, but I'm not going anywhere, so we can talk afterwards if you want. Evaluation of profit margins, if you've heard me talk before, that's all I care about when it comes to marketing, is making sure your profit margins is what is making your decisions for you. Flexibility in your marketing. I know a lot of folks that wanted to be super protected for this particular report today that are right now calling or texting me saying, why in the world are the markets higher? I'm like, isn't that what you want? Well, by God, I bought put options. Okay, well, the best put options are the ones that expire worthless, in my opinion, because that means the markets stayed the same or gone up, right? I mean, I want to see good markets. And so I want to know that my plan is flexible enough to allow me to participate if the market screams higher. And then my number one question for this year, if we're not improving our balance sheets with the kind of commodity prices we've had the last 2 years, we've got some serious problems. And so I encourage people all the time, handle your farm like any other business in the country. ROI, you name it. Return on investment, profitability. Heating oil. I talk about heating oil every time out. We did put a rec out to go ahead and buy some diesel fuel for some of the guys that I work with in earlier December. It wasn't on the low but it was approaching it because it was so much cheaper than what it had been for so long. Heating oil is what you're going to hedge if you want to hedge diesel fuel. This chart, extremely choppy. But look at this chart, nat gas. I actually had to travel a long way from my last presentation. It was about 44 steps that way. I was talking in front of United Prairie Co-op. And I said, you know what? I don't want to make anybody mad here, but with nat gas going down substantially, what should that mean? Anhydrous should become cheaper. It's not United Prairie's deal because they don't manufacture it, right? So you can't hold them accountable, or your local supplier. But I'll tell you what, why is nat gas so much cheaper? Because world weather has not been that tough this winter, okay? Europe's warm, we're warm. I mean, walk outside today. I mean, some of these days lately we've had in the 50s is just crazy. Crude oil chart, you know, why hasn't the crude oil market just, why haven't you seen OPEC step in and buy or limit production to get the price to go higher like they usually do in a downward trending market? Why haven't they done that? And if you're over at United Prairie, you can't answer any questions that I ask, okay? Okay, here's why, my opinion. Who else in the world has oil to sell that's not really favored by OPEC at this point? Boom. And they said, you know what, we'll sell $60 crude oil to anybody who wants to buy it. That's what they said. And so OPEC said, well, we don't want to jack our price up so high that it's something that you can't resist, right, to go there. So that's part of the reason I think your crude oil market's where it's at. I do think that at some point you're going to see this thing actually go back to the upside. So now we're going to go into some, we're going to talk about the government just a little bit. And Will Rogers said, I don't make jokes, I just watch the government and report the facts. I'm a little bit too young for Will Rogers, but I think he'd have a lot of material in 2023 here. The things that really are concerning to me, have been concerning for a long time, is stocks of the SPR. When your Strategic Petroleum Reserve continues to dip precipitously, it scares me a little bit with the world unrest we have. I'm not going to go into a lot of detail about it. I just think it's an issue. Another concern, housing starts. Why are housing starts so bad? I mean, worst we've seen since COVID. Interest rates, of course. You know, you start talking about a person who wanted to get a home loan, 18 months ago at whatever, 3.5%, 4%, try that at 7 or 8. And all of a sudden, your buying power isn't anything like it used to be. And so this is definitely a concern for me when it comes to the economy. You ask me if we're going to have a recession, I'm going to tell you, I don't know. It'd be the most interesting recession I've ever seen, with unemployment fairly low. But then things like this are an issue, as well as how much money we're going to have in our pocket if we continue. Look at the price of eggs right now. I mean, has anybody gone and bought eggs lately? Good night. And I know you're thinking, what the heck are you talking about eggs? This isn't a poultry convention. But here's the deal. It's something that we all need to pay attention to. How much money are we spending right now? I mean, how many of you are uncomfortable with how much money you're spending just on everyday stuff? I mean, I am. I'll tell you that right now. You look at the dollar chart, and as you can see here, we're not going to spend a ton of time, but this looks like a bowl-shaped pattern. And then what do you see happen? The dollar the last couple of days has taken it on the chin. Now, I haven't looked for a little bit because I've been preoccupied with the report. But earlier today, the dollar was actually down. And currently, the dollar is still down, and it's getting hit on the chin. It's down to about 102. So it's a pretty big move, actually. So corn, what should we do now that the report is out? Well, everybody panic, right? I mean, that's what we usually do. I mean, but here we go today. I mean, this is a heck of a deal. I will tell you, I was very concerned about this report. But at the same time, guess what? A lot of people were concerned about today's report. And you know what? They told me, man, I just hope I can get to sell some $6 corn again for fall. And guess what? What are we looking at for fall? I know that the front months are leading the way big time, but D23 is up at 598.5. And if I wasn't doing this right now, I'd be calling my guys that told me yesterday, man, I hope I get a chance at $6 corn again. What do you think they'd tell me? Well, by golly, if it's going up today, it's going to go up again tomorrow, right? And so here's the thing. Today's move is pretty likely, in my opinion, you're going to see this adjusted later at some point. That's the final yield, okay, from the USDA. Can they come back in September at the final quarterly stocks and make some fancy adjustments? You better believe it. And so I want to use something like this for me that improves my profit margins instead of sitting here trying to ask for more rally all the time. And so we're not going to go into great detail, but I will tell you the 670 price that the USDA projected for corn is still 670. And so bottom line is, with 670, what are we looking at here? Oh, wheat acres. So yeah, wheat acres up 3.7 million. That's why wheat's down. That's not too hard to figure out.
Soft red, look at that.
Yep. And why wouldn't soft red winter wheat acres? I mean, why wouldn't you go up? I mean, what's been the most profitable rotation in the state of Illinois the last several years? Double crop beans behind winter wheat, period. It's not even close. So that's what the price summary looks like. I will say this, coming into today, and this didn't change dramatically, obviously because the market is up, world corn production down 55 million tons, but the balance sheet for the world only saw a drawdown in stocks as of December of around 10 million tons. It's pretty similar today from the limited amount that I was able to view it before I started. So if you go down 55 million tons in production, but your carryout only goes down 10 million tons, what does that tell you? What's being impacted? Demand. Demand's being impacted. Why would demand be impacted? Oh, I don't know, $7, $8, $9 corn. Might have something to do with it, right? I mean, what are they paying for corn in the Western Corn Belt? You name it. If you're a cattle feeder and you got 60,000 head, what do they got to do every day? They got to eat, right? And if you're running low on corn, what will you pay to get the corn? Whatever it takes is what you're going to pay. And unfortunately, they don't have the corn out there, and that's why the basis has been on fire. So U.S. supply and demand went from 1257 to what, around 1235, right in there? I mean, if you would have told me 20 minutes ago that we were going to lower the carryout, even though demand was going down 180 million bushels, I would have said, you're freaking crazy. That's what I'd have said. Well, it would have been something similar to that, okay? But regardless, I don't cuss much. I just told the ladies out there, what you're going to see is how I react on report day, minus the cussing, but I typically don't cuss much because I've got so many kids. But supply and demand. 91 million acres is what I'm projecting. 91 million acres. I don't know if you guys follow my rationale or not, but I don't think acreage is going to be extravagantly higher whenever fertilizer was so dadgum expensive in the fall. First of all. Second of all, bean income's been incredible the last few years, hasn't it? I mean, most folks have seen bean yields that they didn't think they'd see before, plus prices have been incredible. And so I'm projecting, now it's going to have to change slightly based upon today, but here's what you got to remember. If you hold today's demand constant and you plant 91 million acres with a normal harvested acreage percentage, and you hold, like I said, hold demand constant, what that gives you with 91 million acres is 1.7 billion bushels. And here's the problem. Hold demand constant. I would have to drop demand 180 million bushels in this spreadsheet. What's that mean? It's 1.9 billion bushels. So what is a gift today? You got to understand, demand destruction is not our friend, period. We got to be careful is to let this thing go too long without doing something to manage the risk of it. If you end up with what, 91 that was at 175. 182 bushel yield would give you a carry of 2.3. So just understand. And how many of you guys think we could have a 182 in the next year or two or three? Anyone? Thank you. I'm going to talk about it later. I think there's a very large chance that you'll see a yield that'll make you cry whenever you stop and look at what it does to prices. So that's what the corn yields look like as far as the state's concerned, 215. But notice out in the west, maroon. I mean, dark red. Why? Because these guys had a significantly worse crop than the previous year. Obviously, we all know it's drought. But I want to point something out. What do these states have in common other than the fact they were in a drought? What do they have a lot of? Cattle. You guys know that the largest drawdown in the cattle herd since 1984 was 2022? People want to know why I'm bullish cattle. And I'm bullish cattle as long as the economy doesn't fall apart. Why? Because the fundamentals are just wildly bullish. I mean, they are very bullish, okay? I know we're not here to talk about cattle, but I wanted to point that out because when you look at how profound the weather situation was out there, it's incredible. I had a friend in southwestern Illinois, went to Oklahoma and bought 80 cow-calf pairs in the heart of them liquidating cows for $1,000 a piece. What are they worth in Illinois right now? It's more than $1,000 a piece. You could probably 2.5 times your money. Now you've got some transportation in that, but that's what you see as far as the states, how much they lost as far as production versus the previous year. You can see Nebraska was the big loser, Kansas, even Texas, which doesn't produce near as much corn, but the bottom line is we lost a lot of production in that part of the world. Now let's talk basis. Columbus, Ohio recently, this would have been a week to 10 days ago, was 20 under. Decatur was 32 over at the time. California, Missouri was 60 over. Why do I talk about them? Because they've got a big turkey plant and they draw a ton of bushels into their area. Hutchinson, Kansas at the same time, 95 over. Liberal was 140 and Hereford was 165, but those are posted bids. All right, what's the deal? Obviously, they don't produce as much in that part of the world and they have high usage, so their basis is already pretty strong. But whenever you're in a situation where you need the corn and you haven't raised it, what do you have to do? You got to jack the price up so high that you can still transport it and people can make money there. And here's the deal. I've got guys in Kansas, that guy in Liberal, Kansas, I talked about him this morning. He called me during harvest, wanted to know if he should fill his bins or go ahead and sell the corn. I said, what can you get for your corn? What do you think he said? $9. I said, what's your corn making? He said, my irrigated corn's making 2 1/4. I said, pretty sure you can make money there, right? I don't know. I mean, maybe it's smart just to go ahead, sell the corn, and not mess with it. I mean, moving forward, what do we need to be thinking about whenever it comes to holding on to corn? From a financial perspective. What's the cost of ownership? Interest. Good night, guys. We got to recalculate some of these things. Already, guys, listen, you're looking at finally today, you're seeing a little bit of bull spreading action. But March corn today is 672 3/4, and you're seeing what? July corn 663. What does that tell you? They're begging for the corn today. I'm not saying that you won't get a rally in the summer. I'm saying that they want it today. That's a fact. I don't know what tomorrow holds any more than the man in the moon. I know they want it today. So there's no incentive whatsoever to hold on to this corn as far as the market is set up. Now, what you got to hope for is that you get some crazy basis. You get something that happens for you on down the road. There's your stocks and stocks use ratios, obviously extremely tight. World stocks and stocks use ratios, very tight from a historical perspective. I say less China. Why? Because China does not put corn on the world export market. We are very fortunate. A timely rain with these genetics will do wonders, right? I mean, I would rather, let's talk agronomics, I'd rather be dry. I'd rather be dry and then catch a rain at the right time than to have too much dadgum rain all year. I'm sick of losing nitrogen whenever we put an inhibitor on and you just get rain after rain after rain. We had it for several years in a row. These genetics, though, like a little bit of stress if you can catch a rain at the right time. So there's your world corn stocks once again. Exports. The U.S. continues to lose the share of world exports that we used to see. So the red dots, of course, is the world corn exports. The blue dots, U.S. We used to be the game. No longer, though. Brazil is a major powerhouse. Obviously, the Black Sea region, if they can get healthy again, will be another one. That's what the chart looked like before today. Before the report, we were below most moving averages on March corn. Okay? This chart is bound to look healthier, but I sure hope that we can hold these gains into the close. Right now, we're up 15 to 16. It's nice to see. But the bottom line is this, coming into today, anybody who watches charts would tell you it didn't look good, okay? D's corn, a little bit different, but still below your moving averages. D's isn't having near the day that the nearby is, and a lot of that has to do with the fact that we lowered the carryout. And anybody in my world is looking at this, lowered the carryout with lower demand. Once you lose demand, demand doesn't come back overnight. So again, you have to think about what does this mean to you on 23? And don't sit here and tell me that, hey, Matt, my corn that's cash is worth $675. I'm dang sure not going to sell $560 corn, right? How many of you guys have thought that? You guys are lying to me. I know, because last year's price or the cash price screws you up, does it not? If we're honest about it, it messes us up. So I'm going to talk soybeans. World soybean production. What we found, essentially is that, as Jeff said, world carryout actually increased. And that's with Argentine production going down. Okay, so why has the bean market been so strong lately? I mean, we don't even need to look at these. I will say the soybean carry situation is very similar. I don't know where Jeff went, but I mean, it's very similar to where we were at a year ago. But why has the bean market been so strong lately? Drought in Argentina. Jeff said 50% of the world's soybean exports typically come from Argentina. When you see Argentine dryness, the soybean meal market usually rallies significantly. I'll show a chart on it in just a little bit, and then it's followed by soybeans. If I look at acreage for beans, I'm at 88 currently. I think you're going to be pushing around 180 combined total acreage. My personal thought is that bean acreage will get fairly close to corn, but with the kind of income we saw on corn this last year, it's going to be hard to see beans overtake corn. I think next year it'll be closer yet, and I'm not so sure that next year will be the last year corn acreage outpaces bean acreage. Why would I think that? What's going to be the demand driver? The scope of soybeans in this country is changing on a daily basis based on renewable diesel. And if you're getting tired of hearing about it, just keep on getting tired, because it's going to continue to evolve and develop. Why is renewable diesel evolving and develop? I'm going to go into it in a minute, but I'm telling you, it's profound. Illinois at 64 bushel yield. Our all-time record was 65. We were projected 66 earlier in the year. Had too much variability in bean yields. There's where your drop in production was. And then there's your stocks. So we have seen tighter stocks on soybeans than what we see currently this year, but this is certainly one of the tighter situations. And so that's your U.S. stocks, and then here's your world stocks. So why have beans been able to rally at a time whenever you're looking at stocks-to-use ratios of 30% or more? Why in the world have you seen this happen? Typically, when you have extremely large supplies, the price is not able to rally. What's happening here, though? Soybean is what's driving the price? Supply or demand? Demand-driven. Beans have been demand-driven, and their driver has been China. And what's going on in China right now is that they say their economy is slowing. And I'm not saying that it's not. I know they have a major COVID issue there. They're saying that their economy is slowing. Every time that they've said that their economy was slowing, they magically have bought beans on the world market. Whenever, what does them saying that their economy is slowing do to the price of soybeans? They drop. It's pretty convenient, correct? But here's the thing, they know how the game is played. We all know how they're playing the game. It continues to happen, but just be very careful whenever it comes to news. And I'm not picking on anybody. I'm just saying it's really hard to think that you can beat them at their game, okay? If they cancel a cargo of soybeans, what's going to happen within the next week? They're going to purchase it again, and guess what? It's going to be at a cheaper price. You say, how can they do that? Does it make sense? I agree, it doesn't make sense. But if the person who's negotiating the trade is still able to make their margin, it happens. I can't tell you that I agree with it. It's just the way things work. So you look at South America continuing to gobble up more of the world's export percentage. For me, I'm okay with this to an extent. Why would I say that, though? Here's what I'm going to tell you. With the renewable diesel industry continuing to expand, if we can use more beans domestically, I'll tell you what, who cares if our export share goes down somewhat? And so let's get into it. I mean, that's what crush margins look like. And I mean, obviously you can't see all the gory details, but whenever you see a margin chart and it's high, it means someone's making a ton of money. Okay? So crush margins. What have we crushed beans for in the past in the U.S.? What do we crush them for? What was the main thing we wanted? Soybean meal. What are we crushing them for today? Huh? Oil and meal, right? I mean, you look at crush margins versus the last several years, obviously we're making some money. It's pretty hard to think that we're not going to crush them, okay? Why do I bring that fact up? I've talked about this and talked about this. Renewable diesel, guys, is going to expand the crush industry by around 33% with all of the plants that are either in production or planned to come online. There's several that are already online. And why am I so sure that this is going to happen? Well, who supports it? Who supports renewable diesel? You know, with 75% lower greenhouse gas emissions, who do you think supports it, first of all? It's a pretty important player here. The federal government. Both sides of the aisle. Big supporters. You guys want to say that it's a bad thing if it's lower emissions? I mean, come on. You can't make that argument. It's a good thing for all of us, quite frankly. But who has fought ethanol tooth and nail from the get-go? Depends on which party's in leadership, and who knows. Half the time politicians for it, half the time they're against it. Depends on if they're from a corn state or a bean state, you name it. Okay? But who else has fought ethanol tooth and nail? Petroleum, big oil. Does big oil support renewable diesel? Careful with your response. Actually, they do. You look at the money invested in these plants, and you're seeing names like BP, Shell, Amoco, whoever. I mean, these guys are investing. Why would they do so if they're not able? I mean, how much formulation of renewable diesel is based upon soybean oil? Do you know? Anybody? It's pushing 100%. Is that incredible or what? So why would big oil like it? Because the tax incentives are there for the taking. And if they can invest the money, they can pay off their investment pretty quick. They don't care what happens 10 years from now if they already made tenfold on their money, right? And so they're actually for it too. Those are all the plants, and you can't really see it great, but several of these are running. Several of them are expanding. Several of them are being built. And then the little triangles, if you can see them, are the ones proposed. And that's the smallest category here. So you got to ask if all this is going to run. I feel pretty strongly that it will. It's going to take a little bit of time, but most people that are smarter than me are going to tell you that follow this, like a guy from Rabo I've been working with to kind of analyze this. Says by 2025, he feels confident we'll be pushing up on that 30 to 33% expansion of the crush industry, which is a huge expansion. So there's your bean chart. It's going to look even better after today, but it's different than the corn chart in that we were above your moving averages. Corn was below the moving averages. Look at this chart, though. Soybean meal. Guys, that's a big-time chart there. I mean, I'm no expert, but here's the thing. You look at that thing. I mean, you basically went up $100 a ton in a matter of 5 to 6 weeks. Based on what again? Argentina, period, end of story. And then there's your November soybean chart. So November soybeans also were looking quite healthy. Let me see what beans are doing on November. This is pretty handy. I'm going to run out of battery though before too long. So Nov 23 beans up 14 at 14.01. How many of you guys have said, I would like to sell beans at $14 again? You know, and I think several of us have been in that camp. Here's your chance, basis the board. I mean, guys, bottom line is this. How many times in your career have you ever, in the month of January, sold $14 beans November? I know the answer, and it's none. It's never happened, okay? And so how many of you guys, as we get ready to talk managing risk, are going to tell me, hey, Matt, I sold too much corn or too much beans. I sold too early last year. Did anybody sell a few bushels too early? You did. You did. Okay, let me ask you a question. Were those sales profitable? Yours were, and yours were. Okay. if you sell your first sale at a level that you're ticked off about later, but it's still profitable, do you have a good year? I think you do. So if you tell me, Matt, I ain't selling jack squat, you don't know what you're talking about. Last year, it bit me in the rear end. I've had people tell me that over and over. This is my favorite slide, and I've really built it up, so here it is. This is what I'm going to say to you. Matt Foley. Lottie freaking da, right? Guys, let's learn from our mistakes in the past. Let me give you a bit of information. July beans, November beans, and December corn. As of Jan 1, as of that point in the calendar year, highest prices ever. Ever. In July, beans was by $1.51. You think that's a significant bit of knowledge we need to know? I mean, I would hope so. I mean, you say, well, inflation might end up making it go higher. That's great. Is the farmer always long? If you're out of your old crop, are you long? Yeah, new crop. I mean, the guys that are complaining about their hedge positions today that might lose a couple $1,000s when the corn in their bin's making 40, I'm going to tell them, Lottie freaking da, right? The same thing. You got to understand what this means to you. But am I saying to go out and sell everything at 14, 16 if it gets back there? Not necessarily. But I'll tell you what, would you feel pretty comfortable buying a 1380 put option, even if you spend a little money on it, and being able to sleep all summer knowing your worst case scenario basis of the board is 1380 minus the cost of your put?
Matt?
Yes.
If Brazil turns in a crop 1 billion bushels more than last year by the end of February, mid-March, and we know that figure, what's the downside to no 24 beans, or no 23 beans?
$1.52. Okay, and so Argentine production down 4, 5, call it 10 if you want, million tons. Okay, Brazil's crop last year wasn't very good, Jeff. And so guess what, guys? South American production for soybeans is going to be up maybe 25 million tons in totality, including Argentina's drop. So when world supplies are growing, Jeff told us, carryout is higher on the world. And that's with Argentina going down. When world supplies are growing, typically you don't see big rallies. Okay? I'm not trying to be bearish on you. I'm just telling you, I mean, that's common sense. All right? That's the way things work. So let's look at 3 different years. 2008, and I know it's not up here, but 2008's rally, 2012's rally, 2022's rally. 2 years in advance. As you can see, the market started building some enthusiasm in all 3 years. The year before the rally, these are not as correlated as 2 years before the rally, but you can see continued strength at times for all 3 charts. You look at 2008, 12, and 22. How many of you guys remember 2008? 2008, going into pollination, we were walking in tall cotton. And guess what? D's corn dropped $4 by the time it expired. $4. And so what did we do in 2012? We said, well, by golly, we're not going to make that mistake again. We're going to get hedged up. And a lot of folks that I worked with in the elevator business sold too much corn in 2012. Why do I preach flexibility? Because if you step in here today and say, man, that guy sounds bearish, I'm going to sell 60%. And it's his fault if I'm wrong, right? But guess what? If the market screams higher, you're in big trouble if you're not flexible. You got to stay flexible. So these are those 3 years. So let's look at the next year after. The most important slide of the 3. 2009, you couldn't hardly buy a rally. 2009, if you guys remember, was a pathetic year. Let's just say that. It was wet. We harvested wet corn. 50 cents a bushel to dry corn that wasn't worth jack squat, even though the yield was good. We didn't make much money in 2009. 2013 was the beginning of the downfall. Guys, 2015 through 19 stunk, but it all started in 2013. Fortunately, we had a big crop in 2014 to kind of stave this off. What's going to happen in 2023? Your guys' guess is as good as mine. All I can do is look at historicals and ask myself, is the same trend going to evolve? I don't know. All I'm saying is, if it does, what's my plan? What's my plan? Because if I've got a worst case scenario locked in and I can still participate in an upward market, what a beautiful place to be. Fertilizer prices, I already talked about where we were at Jan 1. Here's the deal. Last year, anhydrous was $200 plus a ton more expensive on Jan 1 than what it was this year on Jan 1. Did we all pay a lot for fertilizer this last fall? You better believe we did. And so whenever I went to Farm Progress Show, I said, you know what, if you want to buy fertilizer, step in and do it. But what else should you do at the same time? Sell some corn. It was $6.30, $6.25 to $6.35. And here's the thing, if you're buying high-priced inputs, what are you betting on? That the price of corn was going to be what it was during harvest, right? Oh, it's going to be $6. It can't go under $6 again. Hey, you tell me that, I'm going out to buy put options, right? Because when that mentality comes into place, that it can't go lower, Katie, bar the door. You better watch what's going on. So that's what it looked like on a chart. Obviously, we dipped back down, came back up, and now we're down about $50 off of that anyway, maybe 75. DAP and potash, obviously, they're cheaper than where they were. But if I look at this, corn prices at the bottom on the red versus anhydrous, we didn't go up near as much on a percentage basis as what anhydrous went up. But this is what I'm going to tell you. If you really want to see anhydrous prices drop, I always say be careful what you wish for, okay? Because you'll make more money with high fertilizer prices and a high price of corn than what you will if fertilizer comes down, but corn comes down as well. Run the math on it, guys. If you run the math on it, it makes a heck of a lot more sense. So what the U of I say? I was here at the Farmland Assets Conference, and I saw Scott Irwin put this thing up there, one of them. It might have been him and Joe Jansen, but 21 income on average for FBFM folks, $446,000 in Illinois. Last year, the projection was $350,000, and these bearish rascals, $81,000 is what they're projecting for 23 income. I'm not saying they're right, but what's their rationale? Anybody read the article? They're saying the same thing I've been saying, that big-time profit margins in 21 and 22 have got us so screwed up that we're unwilling to accept a measly $100 or $150 an acre as a worst-case scenario. What's going to happen next summer if, Jeff, you see a huge Brazil crop, we plant a lot of crop here in the U.S., 180 million acres, and then we have a good weather pattern? I don't want to be on the flip side of that. I want to be protected in the event that happens. Interest paid. Those of you who lived through the 80s, obviously, what's the highest percent some of you guys paid? Just throw a number out. 20. 21.6. All right. Was that a shark deal or what was it? That was a combine. Combine. But you paid 20. So 20. On average, most producers were borrowing significantly less in the 80s, correct? Because it didn't cost as much to put a crop out. My first crop that I put out, senior in high school, 1992, cost me like $85, $90 an acre to put a crop out, right? But I'm not saying, I'm glad I didn't go through that. I walked through it with my dad, but I didn't know any better, right? He made it through, thank goodness. But the bottom line is this. If he was borrowing $100,000 at 20%, what's that equal? Guys, this is not a hard question. $20,000. Okay, is it common for someone to borrow $500,000 to $750,000 these days to put a crop out? You better believe it is. What's the math at 7%? Right? And I know the cost of money is different, but guys, the 80s were tougher on people due to the drastic swing. I can agree with that. But if we don't think interest is going to bite us squarely in the butt if we're not paying attention, we are not paying attention. Be careful with the way you handle your business over the next 12 to 18 months. I'm almost done. Here's the thing. 91 to 21, average bushel per acre increase for corn was 2.0253 bushels per acre per year. But from 2013 to 2021, which was in that range, the last 8 or 9 years, the average increase was 1.28 bushels per acre. And you say, well, boy, that doesn't make sense. Let me ask you guys a question. Are you guys and gals planting better corn genetics than you ever dreamed you'd plant on your farm? Yes. So is genetics the problem? No. Mother Nature's not cooperated. Guys, I'm telling you, I would bet any of you money that we're going to see above 180 within the next 2 years. And I'll tell you what, I might even bet you $5 or $10 that we're gonna see a 185 within the next 3 years. Because at some point, the stars are gonna align, Mother Nature's gonna cooperate, and you're gonna get a 2014 type yield, or a 2018 type yield, or 2004, you name it. Guys, we've had some years where nothing could go wrong from a weather perspective. It's going to happen. So what if you have 91 million acres planted with a 185 yield? Anybody care to guess what corn prices would be? 4 might be lucky to hold it. But guys, don't assume. Don't assume too much. When we're blessed with the type of prices we're blessed with, the best thing we can do is to take advantage to an extent. Lock ourselves in to a situation where we know we're going to make good money. I like flexible strategies. A $6, $5 put spread's kind of expensive for folks, but it sure made people feel good coming into today. Some of them might want to sell $7 call on a portion of the bushels. I wouldn't do it on more than 15, 20% because I don't want to be locked in to a price as good as 7 if I have a drought. Okay, I don't want 20% to turn into 60% and now I'm in trouble. But I would never sell a call if I'm not buying crop insurance. So if you're buying crop insurance, use the crop insurance, guys, as a part of your marketing plan. I could do a 2-hour session on that, but we don't have time. Same type of thing with beans. Mike Tyson says, everyone has a plan until they get punched in the face, all right? So how many of you feel like you're set up, if you don't handle your business correctly, to get punched in the face? Anyone? Yeah, I mean, I think we are, guys. We have to be careful. We have to be careful. I've had people ask me in the early part of December, and I don't think I said this yet. If I did, I apologize. I've done 2 of these in the last 3 hours, okay? But they asked me, what's the best thing I can possibly do about 2023? And you know what I said? Don't screw up the decisions you make at the end of 22, okay? What do I mean by that? I don't want to pay taxes more than anybody else does. But guys, was equipment as high this December as what we've ever seen in our careers? Yeah? Yeah, it was. Did we update anything? Not this year. Because my dad keeps telling me, well, first of all, my dad's the type of guy that he's ready to retire, okay? But he doesn't want to quit farming any of his ground. And so if we buy equipment, he wants me to buy it because he's too old to be buying equipment. And I said, well, if you're too old to be buying equipment, you're too old to be freaking farming too. Seriously. I mean, I love my dad. I always told him, you do what you want to do. But he's gotten to that age where he says, we need to get done quicker. We need a little bit more efficient operation. What does it mean to say that we want to get done quicker? Big time money, right?
Kitchens are cheaper.
Kitchen, no. No. Trust me. We picked a wonderful time to do that project. If you want my slide deck, you can take a picture of the URL. If you want to talk to me, just simply send me an email. If you take a picture of the URL and you sign up, someone may call you and ask you if you want to get our research and everything else. You don't have to. There's no obligation. You'll still get this slide deck, okay? I just want to warn you. I'm not going to be the one calling you. I've got several guys that work with me. So, and I don't want to go into anything else. I could show you what we do with marketing with our guys, but I know we don't have a whole lot of time. So if you didn't get a snapshot of this, catch me out in the hallway. Last thing I'm going to show you is my risk disclaimer. You cannot hold me liable for anything that I said today. Questions? I don't sell seed, but I go out and make presentations for Channel. I plant some different stuff, but here's what I'm going to tell you whenever it comes to genetics, okay? Your cost per acre for fertilizer has skyrocketed, right? Your cost per acre for seed has skyrocketed. Has your fertilizer technology advanced? It's the same DAP and same potash you've ever put on, right?
The way you put it on changed,
So,
but
right, you can maybe be a little more efficient, do some VRT. I do the same type of thing. But the thing about the technology is, how many of you guys, before we got some of the BT and stack technology, really enjoyed picking down corn? You know? And so then the luxury of knowing that we've got, I'm not an employee of a seed company. I'm just going to tell you that. I like knowing that unless I get hurricane force winds, my corn is going to be standing, okay? It's going to cost me more to put it out. I agree with you. It is a little frustrating. I would tell you down in Shelby County where I'm at, we've had a heck of a lot of success with double stacked corn. And guess what? It out-yielded some of our multi-trait stuff. I think that we all have to be really, really smart about what we choose to put on our fields, do a ton of research on it. Talking about beans this year, for instance, I had a bean yield. I had one number that had this, it had, what the heck was it called? Stem canker. I'd never had it before. Oh, man. I thought these beans were, I'll be honest with you, I thought they might make 100 bushel. They looked incredible, and they weren't even in the same ballpark, okay? I had phenomenal beans this year, but then I went and cut beans the next day, and these beans were a little shorter than the other ones, and they made 85. And so we had really good beans overall. Don't get me wrong. But do you think I'm going to plant the one that had stem canker this next year? Nope. They could give them to me, and I wouldn't plant them because it'd cost me more to plant them than what it'd be worth. Any other questions before we eat?
Looks like you're good, man.
Good. Thank you.
All right, good deal. Let's give Jason, Lee, and Matt, our speakers today, let's give them a nice round of applause.